variable or fixed? What should I do? And I think that answer changes often. So I want to talk to you a little bit about what I would do in today's market. So right now we are seeing the largest differential or the largest difference between variable and fixed rates that we've seen in a very long time. Really probably the largest differential we've seen ever. So a 5-year fixed rate mortgage is in and around the 3.5% right now. A 5-year variable mortgage is in the 2.5% mark. So let's break this down a little bit. What determines the rate of a variable rate mortgage? Well, that's the Bank of Canada overnight lending rate. So when you think about a 3.5% fixed rate, the Bank of Canada would have to raise their overnight lending rate 4 times before today's variable rates would even be what today's fixed rates are. So what does that actually mean? That means that you can borrow money today for 2.5%, have a much lower mortgage payment, and add additional money to your mortgage payment every month, or invest that money elsewhere to earn a return on it, and actually put yourself ahead at the end of the 5 years. Now, a lot of people will say to me, Renee, but what if the Bank of Canada increases rates quickly? So there is some upward pressure in interest rates, but it's important to remember that in the last 7 years, before October of last year, the Bank of Canada didn't raise interest rates. We've seen 3 increases since October of last year, but we're coming up on almost a year and we didn't see those 4 increases. So I really think that there is an opportunity with the variable rate mortgages right now. The other thing to consider is that when you take a variable rate mortgage, there's a lot more options, because if you had to sell the property because you were transferred somewhere or your job changed, it's only a 3-month interest penalty to break that mortgage. So for example, if your mortgage is at BMO and you had about a $300,000 mortgage, it's only going to cost you about $2,000 to $2,500 to break that mortgage a couple of years in. If you had a fixed rate mortgage, your payout penalty is going to be more like $10,000. So not only are you getting cheaper money, cheaper borrowed money right now, you're also getting more flexibility in terms of breaking that mortgage should you decide to buy a larger home or transfer somewhere else and have to list that property. So there are really some advantages to that right now. It's also important to remember that variable rate mortgages can go up and can go down. So right now, yes, we are seeing some upward pressure in the overnight lending rate. I do think that interest rates will go up a little bit over the next couple of years, but the Canadian economy isn't really on fire as of yet, right? We increased the rates a little bit to settle the housing markets in Vancouver and in Toronto, which we did. And so I don't think that there's a lot of incentive for the Bank of Canada to just keep increasing rates month after month. I really do think there's an opportunity there. And something I want you to consider is that if you took a 2.5% variable rate mortgage, but decided to pay the mortgage payment of the 3.5% fixed rate mortgage, you could actually pay your mortgage down about 4 years faster with that variable rate, and then paying the fixed rate payment. So really there's a lot of opportunity. So what I like to do with my clients is sit down. I have an awesome spreadsheet that allows us to run 6 different scenarios specific to you, and we can evaluate what scenario makes sense for you today with this property. And it's also important to remember that this isn't just for home buyers. If you have a mortgage coming up for renewal and your situation has changed, maybe one of you's taken maternity or paternity leave, maybe your job situation has changed, maybe you make money in a different way. There are so many options available with mortgages today. I think it's really important to sit down with somebody and kind of do an annual checkup to say, what is my rate? Is it fixed? Is it variable? What are my prepayment options? What is my payout penalty? And really have a sense of where you're sitting with your current financing. I'm Renee with MMG Mortgages. If you want to talk about variable versus fixed rate or anything else under the sun, please feel free to give me